Hello there. This is Be the Boss of Your Money. We are live. My name is Mitch Goldberg. I am your host. This is my live stream. I do this every day at 4:30. I should say every Monday through Thursday at 4:30, where we talk about personal finance, business talk, business strategy, business news. We talk about investing. We talk about lots of things that fall under those general umbrellas as well. So what we need to do is figure out exactly what we can do to make you better with your money. We want you to be the boss of your money, and that's what the whole point of this show is all about. Today, we're talking about count them, the three biggest business stories of 2020. It's a big topic, and I think we have a couple things to talk about. I'm going to share with you some runner-ups, why they didn't make the final cut, and then we get into the final cut. So we're going to skip our usual intro with the market update. I think you can get that pretty much anywhere, but just let's say nothing spectacular today in the market. So let's roll the quick intro, and then what we're going to do is get into the three biggest business stories of the year, what they are, what they mean, why they would impact you, and should they continue. Hello there, I'm Mitch Goldberg, your host. You're watching a brand new live episode of Be the Boss of Your Money. Thank you so much for joining me. Your time is valuable, and I greatly appreciate that you have decided to share some of that time with me. So I want to make this show worthwhile every day. If you're just joining us, again, welcome. If you have any questions, please ask me in the comments. If you have any questions about anything you hear today, I would love to have a shot to answer those questions. If you're watching this in the replay, I'd like to welcome you. And if you have any questions, certainly ask away in the comments as if you were watching the replay, and I will certainly see the alerts, the notifications, and I'll answer those questions. So what we're going to do is we just fixed something on my screen. What we're going to do today is we're going to talk about the three biggest stories of the year of 2020. Boy, oh boy, we can say a lot about 2020, and there is just so much to talk about. I think a lot of us are ready for 2020 to end, to say goodbye. But I do hope everybody found some joy in the year, and I would like to wish you a happy, healthy new year as well. So let's get into it. There were a lot of big stories this year in 2020, and I think this year has more big stories than any other year that I can recall since I've been in this industry, the securities industry, which is now over 3 decades. But this year takes the cake, and I really want to say that this was the black swan of all black swan events that you can't possibly predict, negative events that no matter what you thought of, you would never predict. And that is what 2020 is all about. And it teaches us that anything can happen, including an up stock market and rising housing prices. We've got a few people out there, so let's just take a quick look, take a quick gander. We've got Michael. It's been a wild year in the financial markets, without a doubt. Hey, Bill, great to see you. Thank you so much for joining us. And Michael, you are there. Thank you so much. Yes, wild year. Thank you very much for joining me. I greatly appreciate your time. Let's also say that Jillian is out there as well, and I appreciate you joining us. Jillian has been a guest of mine on the show. And Jillian, I'd love to have you on as a guest. Again, let's talk about all things social media and marketing for 2021. That's a good title for a new live stream coming up in 2 weeks, maybe 3 weeks. Okay, so let's talk about the runner-ups first. I have my list, my notes, my chicken scratch. So runner-ups, and there are many, many big stories that could have made the final cut for 2020. It's tough to know which ones to put there, which ones to exclude. I think a lot of this has to do with personal preference and how you see things. So I'm viewing things strictly through a business lens that has to do with investing, saving for retirement, becoming better with your money, personal finance. That's the main thing of this whole show. The main thing. The main thing is personal finance. Howie is out there. Hey, Howie, miss you, my brother. Good to see you. Thank you so much for joining us. So for the runner-ups, tough to say which ones, but first of all, one of the things we looked at was low interest rates, ultra low interest rates. That certainly is a huge business story that permeates everything. But interest rates have been low and going lower ever since the Great Recession. So is it really the story of 2020? Or is it more like a continuation of a big story that's been ongoing for more than a decade? I think the latter, not the former, which is why ultra low interest rates did not make the final cut this year. The next one is soaring prices of residential homes in the suburbs. Notice I meant in the suburbs, not in the city. As millennials run out of the urban areas to claim their stake of the American dream, owning a house in the suburbs, this has caused a major shift in both population shifts and in terms of the cost of housing in the suburbs. And we have finally seen the millennial generation come of age, buying houses, having kids, 2 cars in the garage. And you know something? It's great. Welcome to you. And we're so glad that you're now part of the housing market. Good for you. However, that has also caused the price of houses to skyrocket. Now, that could also tie into the low interest rate runner-up story that we just spoke about, because housing and interest rates are pretty much intertwined. Not completely. Housing is also driven by other factors besides just the cost of housing and comparing the cost of owning to renting. It also has to do with demographic shifts, which we're seeing right now while we have ultra low mortgage rates. And this is creating a major surge in the price of housing. But I don't think it really makes the cut as one of the top stories of the year. Now, if I was a realtor, that would definitely be my top story of the year. But I'm not a realtor. I'm more of an investment guy in the public markets. So that's my story, and I'm sticking to it. And if you're a realtor and you're watching this, no offense to you, hit me up in the comments. Join my show sometime, and I'd love to talk about the real estate market for homes. Okay. Now, what about oil? The price of oil. This could be another big story, right? If you recall, I believe it was March or April, oil went negative. Believe it or not, oil went to not just 0 cents per barrel, but if you owned oil, you would actually have to pay money on a barrel of oil. It was a pretty short story, pretty quick time frame, but it was very important and something that we had never seen before, partially because of a major glut of oil because of the shale boom going on in this country, and because all of a sudden with the Great Recession, it was expected that our demand for oil would just bomb. But oil's recovered back to the 40s per barrel. So I don't think that really makes the cut, although it was a pretty huge story when it was happening. And then there is the phenomenon called work from home. And that's a big one because that has to do with the stock market and how the stock market works. But the work from home, also known as hashtag WFH, and stay at home, its sister, hashtag SAH, the work from home, stay at home has been a trend that has been probably one of the most powerful investment trends in such a short amount of time that we have ever seen in financial markets. It lifted several companies to the $1 trillion plus valuation, including Apple, Microsoft, and Alphabet, also known as Google. So we have $1 trillion companies, and we have lots of companies worth over $500 billion. And that just also includes the rest of the tech sector, from cloud computing, software as a service, gaming, etc. Is that the biggest story of the year? Does it make the top 3? I think it has to do with one of the big top stories of the year, which we'll get into. But I'm going to say the work from home, stay at home was really a reaction of money coming out of economically sensitive stocks like industrials, energy, building materials, and consumer discretionary, and moving into the areas that have enabled us to work from home and stay at home, like Zoom, like DocuSign. And you've seen what these prices have done. And yet, if you look now, many of these prices are a pretty far ways off their highs and have come down quite a bit. Does that make them better buys now? Or does that mean the end of the story for the work from home, stay at home cohort. Stay tuned. We haven't heard the last word on this, and that is a little bit more than what I want to get into on the show right now. But we'll do that for another show. What's next? The clear, heart-wrenching devastation of small business all across the country. I could say you could make that the number one business story of the year. And nobody could fault you for saying, Mitch, come on, that should be number one. It's also a human side to the story. Businesses have gone under, restaurants and other businesses that have been in families for decades have been destroyed by COVID. Yes, you could say they've been destroyed by government shutdowns and lockdowns and people just plain old afraid to go out and catch COVID-19. Whatever the reason you want to put to this, and I'll say, hey, maybe it's all of the above. The devastation of small businesses across America, well, it's been devastating. And most jobs are created by small business. So without small business, we literally are at the mercy of big business with their rather low wages in many cases. So that's been a clear story and a very sad one. And then the next one that could have been a runner-up, okay, is Tesla. Tesla is a story in and of itself. It is a modern day miracle, an auto company run by a guy who is like the Renaissance man of our generation. Okay, Elon Musk. He is considered by many to be the next Steve Jobs, maybe even bigger. And there is a reason why Tesla is up so much, because it's not about cars. This is the bullish reason I'm giving you. It's not just about cars. It's about battery technology, solar technology, satellites, etc. There are a lot of moving parts to Tesla. And the fact is, they don't make a ton of money. They're profitable because of the government guarantee. When you get government tax breaks to buy a Tesla or lease a Tesla, but that doesn't mean they're making money on an operating business of cars. They're not. But that is a story in and of itself. And I think that is worthy of an honorable mention. But I still don't think it's one of the biggest stories of the year. So without further ado, and I'm sure you can think of plenty more top business stories that I haven't even mentioned here, that I haven't even thought of. So if you know or think you have an idea for a top business story, let me know in the comments. Maybe we can talk about that too. And maybe I could say I erred and I need to make a correction to my top 3 list. Having said that, if you have any questions, ask me in the comments. Having said that, I'm going to now give you my top 3 business stories for 2020. The first one is the stock market. Yes, the overall stock market. Now, this could entail a bunch of things like work from home, stay at home stocks. It does. Interest rates that are ultra low. There's a lot of things that this could really include. But the fact of the matter is the stock market plunged. We went from record high into a deep recession and a deep bear market in record time. From last February to last March. In about a month, the market lost more than a third. The S&P 500, which is an index. You can't invest directly into an index, but you can invest in a security that tracks or mimics an index. The S&P 500 tanked in record time, dropping by more than a third in value. And just when things were bleak and the stock market was over and the great bull run that emerged from the Great Recession would be gone forever and we would never see a good market again, what happened? Stocks took off, but different stocks. And a lot of people don't understand why. The big work from home, stay at home stocks, in particular, FANG-M, that's 6 stocks. The acronym FANG-M is Facebook, Amazon, Apple, Netflix, Google, and the M is for Microsoft. These stocks took off because they were ideally suited for everybody going home and working from home and having nothing to do except for sit on their screens. They didn't really sit on their screens except to look at their screens, at their smartphones, at their computer screens all day long. And anybody who could work from home needed these companies to survive. Now, this includes a pretty big cohort to work from home, like we said before, Zoom, DocuSign, and many, many others, too many to name here. But the stock market wound up catching a bid. And not only did it go back up and recover its full losses from February to March, but the stock market has been hitting new highs seemingly on a weekly basis. So stocks have taken off. And a lot of people are confused about that. So let me explain. The stock market, as measured by the S&P 500, does not measure the performance of the economy. It really measures the mechanics of how the stock market works, where big companies make up a bigger percentage, a bigger proportion of the S&P 500 index. So when these big companies go up, they have an outsized, disproportionately large impact on the overall index. So when you see these giant tech companies and tech-related companies go up, nobody cares about Macy's or United Airlines because these companies, by market cap compared to the giant tech stocks, are actually quite minuscule and pretty much meaningless to the overall index. So that's what happened. And the stock market took off. Lately, the industrials, the economically sensitive stocks, the banks, they've been playing catch up as money seems to be rotating out of these mega cap, large cap stocks. However, the bid is still there for the big tech stocks. And I think it's just that the market is going from rotating into the economically sensitive stocks, and that's helping keep the stock market afloat and maintaining its record high status. So that, to me, is the third biggest story of the year. A lot of people are upset because it is maybe it's a good thing, and maybe it has just exacerbated the wealth gap in this country. A lot of people say because owners of assets did very well, but producers of assets haven't. That's up for debate. But as somebody who's in the securities industry, I'm pretty happy about the stock market right now. Let's go on. The next one is it's a combination of two things. Remember the CARES Act, where Congress authorized $2.1 trillion to be released into the economy. That's what gave you that $600 bump up in federal unemployment pay on top of your state unemployment aid. And it gave every adult who makes under $75,000 or couples who make under $150,000 $1,200. And it gave you $600 for your kids under the age of 17 as well, if you fit into those income descriptions. And then Congress this week just passed another one, the COVID Relief Act, COVID relief bill, for about $900 billion. The two of those combined represent, this deserves a drum roll, 15% of GDP. In fact, by far, the biggest stimulus package ever in the history of economics. Some people say it's too little, too late. The one that we just got gives everybody $600 if you make under $75,000 as an individual. I believe it's $120,000 for head of household, $125,000, and $150,000 for if you file jointly. However, it is much needed. Would have been better if we had this a few months ago, and it would have been better, I think, if it was a little bit bigger. Because if the United States borrowing costs are still below 1% for the 10-year Treasury, then I would have said, go big and go home, or go big or go home, when the getting is good with low interest rates, as long as foreigners are still willing to buy good old-fashioned U.S. Treasury securities. But that's the second biggest story of the year, is the stimulus, which literally saved our economic butts. But the biggest story of the year, maybe another drum roll, the biggest story of the year. Okay. By the way, I want to welcome Michael Ocon and Stacy Billing. Thank you very much for joining me. So the biggest story of the year, what could it be? It's probably not something that you would expect, but I've given a lot of thought to this, and it's a topic that I've covered on Be the Boss of Your Money many, many times in video, in writing, in articles, and in major media outlets. That the title of the biggest story of 2020 goes to none other than Robinhood. That's right, Robinhood, the free trading app, which turns out isn't so free. There's a lot to say about the Robinhood trading app. Is this a force for good where you have free commissions, democratizes the stock market, and brings a whole generation of new investors into the stock market? Well, that sounds great, and I think that's how Robinhood wants to be known. Or is it really just a platform to create more trading volume of stocks so that Robinhood could earn more money for something called payment for order flow. You see, whenever you buy or sell a stock, that trade has to be executed somewhere. And companies that execute trades make a little tiny bit of money on that. So what Robinhood will say is, we'll give you a ton of volume, excuse me. So what Robinhood would say is, we'll give you a ton of trading volume, but in return, we want a couple of pennies also for each trade. So Robinhood has come up with a social engineering app with bells and whistles that rewards you for your trading activity. The amount of trading activity, the more, the better. And it creates an app much like Candy Crush. I think that's a pretty good way to look at it. Maybe like social media sites like Facebook or Twitter, where you just literally are attracted to the site, and it makes it hard to put down. It encourages people to maybe make more trades than they should. Because to Robinhood, the evil looking view of this is that they're not about what's good for you. They're about creating more trading volume, regardless of whether or not it's good for you. And the naysayers of Robinhood will say that Robinhood's not being a fiduciary, and they're not doing right by their clients, and they didn't disclose how they make money, because Robinhood is not a charity. It's not as altruistic as they come off to be. In fact, they just paid a $65 million fine to the SEC for not properly disclosing how they make money to their clients. And then again, Robinhood also has a great community and very, very big defenders. People who trade on Robinhood love it. They defend the platform tooth and nail, and they've created a community much like the Peloton community. Okay, it's like a niche, closed community where people love being involved and trading. So that, to me, is the biggest story of the year. What's happened to the stock market? Robinhood traders are literally moving stocks. They pick up stocks that have tanked, like airlines and other industrial type stocks, and they ride them up. And there are Robinhood traders who are making a bloody fortune doing what they do. I don't think you hear enough about the people who are not making money in Robinhood. And I do think Robinhood is breeding a generation of overconfident investors. That's what I think. Now, I don't mean to knock people. I have said plenty of times in my content, don't knock Robinhood traders. You're supposed to do this when you're young. Make your mistakes when you're young. Learn from it. But is it a learning experience or a gambling experience? And that, to me, is the ultimate conundrum with Robinhood that has yet to be settled. So those are my three biggest stories of the year. They are, again, in order: stock market record highs and how the markets come back from the great COVID-induced recession and lockdowns. The next one is the combination of the CARES Act and the COVID relief package that was just approved by Congress, those two, which represent 15% of the U.S. economy. And lastly is Robinhood. If you have any comments or questions about this, well, if you have any questions, I'd love to see them in the comments. If you have any ideas of what you think should be a top business story, I would love to know. So let me know in the comments. We have Todd out there. Todd Schwendeman, thank you very much for joining me. I really appreciate that. Good talk, Mitch. Thank you, sir. Todd's coming out from LinkedIn. Thank you very much. With that note, I'm going to end the broadcast. Thank you so much for joining me. I really had a great time today, and I hope you found value out of this. And I'll be back, and we get to do this again every day. Thank you.